Our next guest says gold is in a strong bull market and it's only going to get better. But unlike the doomsayers, he is calling for a global economic boom and thinks gold stands to gain. Joining us is Barry Dawes of Australian-based Martin Place Securities. Barry, good to meet you and good to have you on the show.
Thank you. Nice to be here.
So Barry, let's start with what you were telling us offline. You're calling for $1,500 gold by year end and you remain bullish on gold despite having a positive outlook on the global economy. We don't hear that too often. Why is that?
Well, I like to look at the facts and then try and draw the conclusions from the facts. So that's a bit different from having a preconceived idea. But look, the basic thing is we've got 3,300 million people in Asia. And the demand for gold in Asia is very robust. So we've got 1,400 million people in China, nearly 1,400 million people in India, 800 million people in ASEAN, and they've all got rising living standards, and they've all got a history of owning and knowing about gold. So the demand for gold out of Asia, I consider, is in a relentless bull market, and that has basically sucked out so much of the loose gold that has been in the West. So we're getting to a very tight gold market. We've seen it with a lot of the commentators talking about there are premiums on coins and bars in the various dealers in the West, but the demand for Asia is driving it.
So is that really the main factor that you feel will move gold higher? Because I know you say that the gold market is setting up for a squeeze here. So what do you mean? What's fueling it?
Well, there are many things. First of all, as I said, it's basically economic prosperity, believe it or not. But there are big issues that we have to consider. I mean, there's $100 trillion tied up in global bond markets, and to me, that's very, very unstable. And I can see a lot of cash coming out of the bond market because things like negative yields are ridiculous, and the risk that we have in 10 and 30-year treasuries in the US is very, very high. And if you look at the quality of the issuer, I think we really have to be concerned. So there's money that will come out of the bond market. All the issues about debt are there throughout the world. Currency issues are there. But underlying all this, those 3,300 million people want to be wealthier and want a better life.
Well, okay, so let me ask you, a big reason behind gold's rise this year has been its safe haven appeal. But your view of gold rising in a booming economic environment kind of goes against that. So do you see gold as a safe haven?
Oh, look, I think it's fundamental to people's portfolios, yes, certainly as a safe haven, but that's, in my view, it's only a small part of the demand. When we see that 4,000 tons of gold is basically going primarily into Asia, and mine production plus scrap is about 4,000 tons. So we're running down inventory in the West by definition. And when we look at where that inventory is and who owns it, it just means that there's not much left to deliver into rising demand. So we'll see a squeeze. So I think the gold price will be quite high in years to come. And I think this is a very important long-term bull market. We're just seeing the beginning of it.
So what's the best way to play this gold market? Do you like physical gold stocks? What's the best strategy right now?
Well, the leverage is in the gold stocks, and if we look at gold stocks against gold, and if we look at gold stocks against the equity markets, they're still very, very cheap, and consequently, there's good upside in terms of just re-rating. Institutional investors, retail investors are out of the gold market, so there's a lot of buying to come yet. And what's also happening is that after the last 7 or 8 years of growth in gold production and projects for many of these gold companies, they paid too much, their costs got out of control, they had some debt to worry about. But the companies that have remodeled themselves and are back on track are now starting to pay dividends. And I think that the gold sector dividends over the next few years with a strong gold price will be very, very substantial, and that's going to attract a lot more interest. So people should be looking at physical gold somewhere in their portfolio, but a bigger exposure to the gold shares.
All right.
Globally.
Thank you, Barry.
Thank you.
And thank
Thanks
you.
for the opportunity.
Thank you. And thank you for watching. We'll see you next week.